Good morning and welcome to Stock Market Today for Wednesday, June 19th, 2019. I am your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to ChaikinAnalytics.com/today. Sign up for a free email to follow along with this show and get daily stock ideas for you to consider in your inbox every trading day before the market open. So U.S. equities finished higher in Tuesday's trading, and the big theme on the day was a rotation into cyclicals as industrials, technology, and energy led the way. Staples, REITs, and utilities were the only sectors lower in the session. Treasuries were mostly stronger, with the curve flattening. The dollar was stronger versus the yen, but euro, but weaker on the yen cross. Gold closed up 60 basis points, and WTI crude added 3.8%. Breadth on the New York Stock Exchange was positive 2.6 to 1. Breadth on the NASDAQ, positive 2.4 to 1. So again, your leaders, industrials, tech, energy, and throw financials in the mix. Underperformers, staples, REITs, utilities, all lower on the day. Throw comm services and discretionary in there as underperformers as well. Today, Fed Day, and S&P futures are slightly lower in front of the FOMC decision later today. Expectations are for rates to remain unchanged, but the statement could open the door to an insurance cut in the near future. Asian markets were higher overnight, led by Hong Kong, which is up over 2.5%. European markets are mostly lower here this morning. Treasuries are weaker. The dollar weaker on the yen, stronger on the euro. Gold down 30 bips, and WTI crude is giving a little bit back, down 10 basis points. So it's really pretty simple, folks. All eyes are on the Fed today. Support is in the 2,800 to 2,850 zone. I didn't put it on the chart here. We've been highlighting it for the past few weeks. Resistance now near 2950. That's the area around the all-time highs. Briefly poke through them on May 1st and then pull back. The question is the RSI beginning to shift? It pushed above 60 yesterday. First time it's done that during this rally since the start of June, and that is a good sign. That's a good start. Could we potentially see a shifting to bullish ranges? That's what we're looking for. That would add confirmation and increase the odds of a breakout. Remember last week we started looking at some of the breadth metrics that were breaking out. We said the odds were now higher that we'll get a breakout again. So just kind of every day, new data points and updating our probabilities. Chaikin money flow is bearish, but I want to highlight, remember, Chaikin money flow has a 21-day look back period. So we're still incorporating a lot of this weakness back in here where stocks closed, down on big volume and near the lows of the days. As these weak days roll off, we'll start to see money flow improve. But for now, it is in fact bearish. So indicators a little mixed. Fed Day today. Let's see what Chairman Powell has to say. Your market at a minute. What am I talking about in my note today to Chaikin Analytics clients? Stocks rally as U.S. trade tensions with China may be easing. President Trump coming out and saying that he and Xi will meet at the G20 summit next week. NASDAQ outperformed on the day, and I'm asking, is it reemerging as leadership? If you're bullish, we sure hope so. Consolidation in the aerospace and defense group opens up opportunities. Sentiment is less fearful, but certainly not greedy, and futures do point to a slightly lower open here today. Taking a look at our power bars now. Again, the power bars tell us how many stocks in each of these indices, and we can do this at the ETF level as well, have bullish ratings, neutral ratings, or bearish ratings. We can see the Dow added 1.36%, 7 to 4 bulls to bears. S&P 500 up over 1%, 126 bulls, 67 bears. NASDAQ greater than 2 to 1 as it outperformed yesterday, up 1.45%, 25 to 11 bulls to bears. Small caps actually had a good day as well. 484 bulls, 340 bears. Bonds uptick, sending yields lower, and industrials were a big outperformer on the day, up 1.94%. 19 bullish or very bullish stocks for 13 bearish or very bearish stocks. According to the Chaikin Power Bar, large cap stocks and small cap stocks are bullish. Major markets across the board, though, are mixed. Now let's take a look at our stock of the day today. Speaking of space and defense, and we'll take a look at that a little bit later in the show. But Curtiss-Wright is our stock of the day. The algorithm using the power gauge rating kicks out Curtiss-Wright. So let's take a look at it. Chaikin power gauge rating for CW is very bullish due to very strong earnings performance, very positive expert activity, as well as strong price volume activity. Stock had a nice day yesterday, up 2.39%. Very bullish stock, strong trend, strong industry group, type of name we want to consider. Ribbon at the bottom of the screen, where we are and where we have been from a power gauge perspective over the past 12 months. You can see we're on that very bullish rating in green here. However, market and model are not in agreement. Stock has been an underperformer. Now, I will say the intensity of the underperformance has been waning since these lows back here in April, but we're not outperforming yet. Add to that an overbought reading. Chaikin money flow is bullish. Stock is above a flat long-term trend line. So a lot of mixed signals here. And when I see these mixed signals in a strong industry group, I want to go look for better names. I want to add CW to a bullish watch list because if it does begin to outperform and then becomes oversold, all else being equal, it does look compelling to me. But I think there were probably better names. In fact, I know there were better names out there in the space and defense group. Sector tracker. Looking at the movement of the major sectors over the last 5 days, Facebook, strong rally, announcing that they are getting into the crypto game, helping out the communications group yesterday. Group's up 2.5% over the past 5 days. There's an industrials, right, up nearly 2%, cyclical rotation. Discretionary, having a bit of a push here. Retail, still an ugly group. We'll take a look at that in a little while. REITs and utilities round out the top 5. Healthcare, energy, and tech are middle of the road. Materials, financials, and staples are your bottom 3 performers over the last 5 days. Looking like some profit taking in the staples, materials as well. Energy still continues to be uninteresting to me from the bullish side of the portfolio. Now, our industry in focus today is retail services. Over the past 6 months, this subsector has underperformed the S&P 500 by nearly 14%, 13.83% of underperformance. And its power bar ratio, which measures future potential, is weak. 23 bearish or very bearish stocks for only 11 bullish or very bullish stocks, which earns it a rank of number 17 of the 21 subsectors that we look at. But it has actually moved up 1 slot over the past week. Now, some of the indicative names there, names that we want to avoid, or maybe even look for bearish opportunities. National Vision, EYE, has a very bearish rating. Gap GPS, this one pains me. It's one of the first places I went shopping when I had my first job, which was a paper route. GPS, very bearish rating. And Ollie's Bargain Outlet, OLLI, has a very bearish rating as well. But let's take a look at the ETF that tracks the retail space. XRT has a bearish Chaikin Power Gauge ETF rating. And we can see the same analysis applies. Look, it's been an underperformer since last October. You know, the intensity of underperformance has varied, but it's been pretty much an underperformer since last October. And during that time, the rating has never been bullish. It's either been neutral or bearish. It's currently bearish. Now, at the same time that the market and model are in agreement to the bearish side, the fund is overbought. And what does that mean? It means it's overbought within the context of this downtrend. You can see price below the declining long-term trend line. And at the same time, money flow is bearish. So this continues to be a group that we want to avoid or look for bearish opportunities should they present themselves. We're not ready to go bottom fishing in the retailers just yet. Taking a look at what's trending now. S&P 500 movers and shakers are gainers and losers, and the gainers side of the board has one thing in common, and that's China. The commentary that led the market to believe that trade tensions between the U.S. and China are easing, Trump-Xi meeting at the G20 summit next week, led a bid or put a bid to China-leveraged names. And most of these, 4 out of the 5, are semiconductors. Now, the SMH had a great day yesterday, was up over 4%. And you know the importance that I place on semiconductors. If semis are underperforming the market, that's a cautious sign for the market in general. If semis are outperforming the market, that's a bullish sign for the market in general. And look at the list here. Xilinx up nearly 7%. Micron up 5.75%. Qorvo 5.5%. NVIDIA nearly 5.5%. One of these things is not like the other, and that's Win. But however, Win is exposed to China with their huge operations in Macau, Potential easing of trade tensions between U.S. and China led a bid to the China levered names yesterday. That's the theme there. On the loser side of the board, I didn't see any real news for bearish rated SLG to be down 3.5%. Some negative sell side comments on Stars sent that stock down. Constellation, STZ, 2.8%. Facebook's move into crypto, as well as Ripple making an investment in MoneyGram, sent Western Union down 2.44% yesterday. Restructuring plan at Kellogg down, sends that stock lower, down by nearly 2%. And there's your Gap. Retail was actually a mixed tape yesterday, but Gap, a very bearish stock, was down 1.75% on a very strong day for the markets. So there's that relative performance. That's why relative strength is so important. Getting into it now, NASDAQ leads on the day. The Qs we're looking at here, we're up 1.45%. And QQQ, the NASDAQ 100 ETF, QQQ, has a bullish Chaikin Power Gauge ETF rating. Bullish rating. And now look at what's happening here. As the market got weak, underperformance or relative performance started to wane, actually went negative, and now we're tripping back to the positive side ever so slightly. We obviously want to see this continue to improve, right? Fund is now overbought, money flow bearish, but similar dynamic at play to the S&P 500. We're still factoring in this weakness back here. Fund has regained the long-term trend line, which is beginning to curl higher. So bullish investors want to see the NASDAQ leading, right? NASDAQ, your growth companies, your higher risk companies in some instances. We want to see the NASDAQ doing well. And it's beginning to lift its head. Notice that it's within striking distance of the May high, same as the S&P 500 or the SPY. If you look at small caps, they're not even close to their May highs. They're not even close to their highs from last fall. Find the relative strength in the marketplace, increase your odds of finding winning stocks to buy. Sentiment is less fearful, certainly not greedy though. What we're looking at here is the CBOE options equity put call ratio. And you can see that spikes above the 0.7 level have tended to coincide with near-term bottoms in the market. Now, we had one of those spikes back at the end of May. Market promptly bottomed out and began to move higher. Now, we've subsequently started to roll over in this indicator. So that's what we mean. Sentiment is definitely less fearful, but we're not greedy. We're not down here by, under 0.6, 0.55, which would lead us to believe that we might be near a near-term top. And again, what we're looking at here, the blue line, is actually a 13-period moving average of that put-call ratio. If we looked at the put-call ratio, the data gets really noisy. But what we will say is yesterday triggered a reading of 0.55, but we're looking for this moving average to get down here. When that moving average gets down here below 0.6, that's a sign that you might be getting close to a near-term top. Above 0.7, sign that you're getting close to a near-term low in the market. So sentiment less fearful, but certainly not greedy. Space and defense consolidates. We're looking at the XAR here, the ETF that tracks the aerospace and defense ETF. Been one of our top ideas within Chaikin Analytics for the past few weeks and months. And you can see here, pulled back, testing support at the $100 mark and holding, but notice the RSI. Notice the RSI never gets below 50. That's a sign that there's momentum behind this trend. That's a sign that you want to use these pullbacks and consolidations to look for opportunities. We looked at CW, right? And I said there's probably better names out there. We're going to take a look at one in just a moment. But before we do, look at the relative strength holding support. XAR relative to the SPY holding support at this breakout level. Odds are that the uptrend in space and defense is likely to continue. Odds are it's likely to continue to outperform the market. So what do we want to do? We want to look for names like LLL as a potential idea. Pullback, holds 240 support, beginning to move higher. Notice the RSI after becoming very overbought, never broke below 50 on this pullback, and now beginning to move higher. Momentum is behind this uptrend. And at the same time, the stock is a steady outperformer relative to the SPY. There's your process broken down for you. And oh, by the way, LLL has a very bullish Chaikin Power Gauge rating. That's going to wrap it up for today. Head over to ChaikinAnalytics.com/today to sign up for that email. Have a great Wednesday Fed day, everyone. I'll be back here tomorrow.